Hi folks, you're tuned into Business Today. I'm Sakshi Batra. Well, it is the season of IPOs that has come in yet again because after a long haul and long pause, we are again seeing many companies launching its IPOs. Starting off this week itself, we will see two IPOs. First one is the footwear company Campus Activewear. Yes, the IPO will open on April 26th and will be up for subscription up until April of 28th as well. And here are 10 key factors or 10 key things that you must know before the IPO gets launched and also before you get to subscribe to it as well. So let's start off first with the IPO details. Of course, April 26th to April 28th, that is when the IPO will be up for subscription for all the retail investors like you and me. The price band for this IPO is fixed at 278 rupees to 292 rupees per equity share as well. Now, apart from this, you must know that the IPO size is for 4.8 crore equity shares. It is a complete offer for sale. That means that existing shareholders will get an exit point, via selling off their shares and releasing their shares into the IPO space as well. So promoters Hari Krishna Agrawal and Nikhil Agrawal together will offload 1.25 crore equity shares through this offer for sale. Also, investor TPG Growth will sell 2.9 crore equity shares in this IPO, and QRG Enterprises will also be selling 60.5 lakh equity shares via this OFS route as well. Among others, you have the likes of Rajiv Goel, Rajesh Kumar Gupta that will offload 3 lakh shares via the offer for sale as well. Of course, it's good news for the employees of Campus Activewear because the company has announced that there will be a reservation of up to 2 lakh shares for the company's employees as well. And employees will get these shares also at a discount of 27 rupees per share to the final offer price as well. Remember, the price band has been kept at 278 to 292 rupees per share. So whatever is the offer price later on decided, if you're an employee of Campus Activewear and you want to subscribe to this issue, you will get a discount of per share rupees of 27 rupees. So that's good news for the employees, but for other retail investors also, you can bid for a minimum of 51 shares and in multiple of 51 shares as well. So a retail investor must make a minimum investment if you want to subscribe to this issue of 14,892 rupees for one lot. That will get you 51 shares of Campus Activewear, and the maximum investment would be to the tune of 1.93 lakh rupees. That will get you 13 lots of 51 shares each if you subscribe to the maximum limit as well. Now, half of the offer size is actually reserved for the qualified institutional buyers. 15% is reserved for the non-institutional bidders, and the rest of the 35% is actually reserved for the retail investors as well. Let me share this again. Half of the offer is reserved for the qualified institutional buyers, 15% is for institutional bidders, and rest 35% is for retail investors. Now, what does the company do? Now, as the name suggests, you're all very familiar with campus ads being shown on television for a long, long time. The company is a footwear major. It is the largest sports and athleisure footwear brand in India in terms of value and in terms of volume as of FY21 as per Technopack report. Remember, the company has introduced the brand Campus in the year 2005. It also claimed that it is the fastest growing scaled sports and athleisure footwear brand in India from the years FY19 to FY21. Remember, it had approximately 17% market share in the branded sports and athleisure footwear industry in India by value for FY21. Now, this was increased from 15% earlier that was there in FY20. So the market share is gradually increasing in the branded sports and athleisure footwear brand in India and in the market in India. The company also claims that it covered more than 85% of the total addressable market for sports and athleisure footwear in India as of FY21. The company has launched 583 new designs in FY21. The product portfolio includes extensive, styles of 1,433 active styles for men, 241 styles for women, and 485 active styles for kids and children as of December 2021. Now, the Indian footwear retail segment of the market is expected to grow at a compounded annual growth rate of 8% from FY20 to FY21. So, the growth opportunity for the industry and for such players is also quite large. Now, when you say India specific industry segment for sports and athleisure footwear, that is highly underpenetrated. Remember, the evidence is extremely low footwear penetration per capita as you compare it with the developed economies as well. And it is expected to be the fastest growing segment going forward from here with the CAGR of 14% between FY20 to FY21. FY25 as per the Technopack report as well. Remember, its competitors in this segment will be Bata and Relaxo Footwears that are the other listed companies in this space as well. Now, what are the company's financials like, and what does the balance sheet look like? Well, as for financials, in the 9 months period ended December 2021, Campus recorded an over 400% year-on-year growth in terms of net profit on strong revenue and operating income growth as well. Also on partially accountable on low base as well. Now, revenue from operations during the same period grew by 93% on a year-on-year basis to 841 crore rupees, and EBITDA surged 204% to over 165 crore rupees. The margins in expanding by 7.18% year on year to 19.63% as well. Remember, EBITDA is earnings before interest, tax, depreciation, and amortization as well. So the operating profit bit, the net profit, the revenue, all parameters of the balance sheet have definitely shown growth in the period of FY21. The average selling price per pair has consistently been higher at 615 rupees in the 9 months period ended December 2021. That was up from 533 rupees a year ago. So the average selling price has also increased in the last year as well. Also, when you see, volume was definitely affected in FY21 because we actually saw the impact of COVID-19 and the respective lockdowns where people stepped out less to buy things in the retail segment as well, in the retail market. Now, when you talk about the promoters and the management, you already know that Hari Krishna Agarwal and Nikhil Agarwal will be offloading some part of their stake in this IPO via the OFS route as well. Now, when you talk about the risks and the concerns right here, you will be able to see that the sports and the athleisure footwear industry is very, very competitive. The company definitely relies on third parties to manufacture slippers as well. The sales of products are primarily concentrated in North India. Its online sales are dependent on the sales channels controlled by the third party online marketplace like Amazon or Flipkart and others. Also, any inability to procure or to source labor contract for deterioration of labor relations with contract labor staff or increase in labor costs could definitely be a high risk for this company. So keep that in mind before you think of investing in this issue as well. Apart from this, remember that as far as the share allotment date and the listing date is concerned, the campus will actually finalize the share allotment by May 4th. The funds will be credited to the accounts of unsuccessful investors by May 5, and there is a likelihood that the stock will get listed by May 9. JM Financial Institutional Securities, Bank of America, Merrill Lynch Securities, CLSA, Kotak Mahindra Capital, these will be the book running lead managers for the issue as well going forward from here. Other important factors as if what are the analysts really saying about this IPO? Should you really go and subscribe to this IPO? Well, let's see some of the comments right here. Access Capital, talking about the strengths of the footwear company, did say that Campus is the largest sports and athleisure footwear brand in India, both in terms of value and volume as of fiscal year 2021. So that is a big, big positive. However, Santosh Meena, who's the head of research of Swastika InvestSmart, has said that Campus Activewear is India's largest brand. However, it also enjoys the competitive advantages like integrated manufacturing facilities, strong brand recognition, robust distribution network. The company has definitely good growth prospects and relationships with its stockists and suppliers. There's a focus on in-house designing and enviable supply chain network as well. So definitely big positives for the company right there. However, all the positives, Swastika Santosh Meena does say that are definitely priced in because if you look at the valuation part, there is a PE of 78.5 on an annualized FY22 earnings. So the valuation is a little on the higher side. And being an OFS, only for long-term investors, Swastika Investmart has recommended investors to get into this portfolio. But in case you are strong on the footwear brand, footwear market space as well, looking at the kind of success we have seen in Bata and Relaxo, do consult your financial advisor before you decide to subscribe to this IPO.
If you like the video, do like, comment, share and subscribe.